You know, the other thing that people sometimes talk about is this massive proliferation of tokens. This whole thing makes no sense. There's going to be millions of tokens. Of course there are. Like, there's no cost to create tokens. And so you can't just they all serve different purposes. We have many meme coins. It's almost like saying, we should restrict the number of websites because, if we had too many websites, that's no good. The point is that what we're doing in crypto and Web3 is we're doing something very special. We have the ability now to put private property into the internet.
What is your view about NFTs and how you think they are going to evolve, or if they are going to evolve beyond just being a collectibles, which is basically what they are? Financial Fox is proud to partner with Hive Digital Technology, a public listed company focused on building the next generation data center infrastructure using only renewable energy. Hive was the first crypto miner to go public and the first one to have an AI strategy. With operations in Canada, Sweden, Iceland, and now Paraguay, Hive is a leader in efficient Bitcoin mining with the best hash rate realization in the industry. Finally, and most importantly, Hive cares about its shareholders. That's why its strategy is low dilution, low G&A, and focus on cash flow. If you don't know Hive, check them out at hivedigitaltechnology.com. Investing in crypto is not so easy. You need to be a pro to identify the right company, the right market, and bet on their future and upside. Joining me on the show to discuss crypto investment is Chris Perkins, managing partner and president at CoinFund's, one of the most active investors in the space. They believe disruptive technology requires disruptive investor, and they want to champion the leaders of the new internet. Before we get into the interview, a couple of things. Firstly, if you are watching our interviews but you are not yet part of our community, please take a moment now to subscribe to our YouTube channel and follow Financial Fox on social media. You will find all the links in the description. The bigger our community grows, the bigger the Financial Fox gets, and the more prominent guests I can invite to add maximum value to you, whether you are an investor, founder, or crypto enthusiast. Secondly, please remember that the content on the show is for informational purposes only and not intended as financial advice. Any opinion shared by me or my guests are ours alone, and you should not act solely on the back of them. As always, do your own research, level up your skills, and be accountable for your own decision. Now, couple of things about the upcoming event that I'm going to attend. If you want to come by, say hi, I would love that. One is the European Blockchain Conference in Barcelona on the 25th and 26th of September. We have a discount code if you still need a ticket, so you can get 15% off. It's gonna be a great event. I'm gonna go then to Frankfurt for the Proof of Work Summit, which is also promising to be very interesting. And then I will be in Amsterdam at the Bitcoin conference. We have a 10% discount for our community, so go and check out in the description and get your ticket. Finally, from Amsterdam, I will go to Dubai, and then I will be in Lugano at Plan B Forum on the 25th and 26th of October. Lugano is very close to home. They are very proactive and forward-thinking when it comes to cryptocurrency. There is a big Bitcoin community as well. So if you are around, please get your ticket and come to say hi. Also for Lugano, we have got a special code. I really hope to see you at any of these amazing events. I will be hosting a couple of panels, discussion, and then I will be networking and meeting people. So if you are around, would love to meet. Great! Chris, it's so good to have you on the show. Thank you for joining.
Thanks, Steffi. Awesome to be here.
Yeah, great. So I just want to start setting kind of the scene, and perhaps I thought you could maybe tell us about your journey from traditional finance to crypto, and perhaps some of the experience that you transfer from your previous experience to kind of like new, fast-growing technology space.
Thank you for the question. So my background is kind of unique. I started out as a U.S. Marine officer. So I did 9 years in the United States military. I served in Iraq and I came home. From there, I was able to land a job at a company called Lehman Brothers. And at that time, I got into the derivative space. Obviously, Lehman famously failed. I learned a lot through that journey. And the following day, I landed a position at CitiGroup. Over the next 13 years, I built out a number of global businesses. So the long story short is that after the global financial crisis, we had to take this $700 trillion derivatives industry from unregulated to regulated. And I was appointed by CitiGroup to run that business. Lead regulator at the time was a guy named Gary Gensler, who's become very famous or maybe infamous in crypto circles now at the SEC. And it was really interesting. I think maybe that's where the light bulb started coming on for me around crypto, because that's where Bitcoin emerged. And if you think about it, the solution that we came up with was one of extreme centralization. And the fact of the matter is that regulators didn't have a choice. And so they said, we have no idea with all this risk of derivatives. So what we're going to do is we're going to put it in one central container. We're going to put all this capital into it. And that's the way we can see everything and we can manage the risk, because that's the only solution that we have. Fast forward to today, I would argue that there are other ways to manage systemic risk, which we can talk about. I also took over our foreign exchange prime brokerage business. FX markets really rhyme with crypto markets. They're less centralized than other markets. I took that out after there was an issue there. And then I also ran a global futures business on the derivatives side, voice and electronic execution and clearing. I got into the crypto space around the 2014, 2015 time period, started learning about Ethereum. And, I was always watching it as I was growing my career in traditional finance. And I ended up finding myself running the largest intermediary in the world for derivatives. I would have billion-dollar margin calls. I'd have $2 billion margin calls. And but I go home on the weekends and nights, and I'd be messing around in DeFi, whether it's Compound or Aave, and I'd be able to settle things instantly. And while I was waiting for my yen to settle days later. And so I realized that, gosh, I need to be closer to innovation. I need to be, I'm running the largest intermediary in the world when, honestly, we don't need them as much anymore. I developed a personal thesis around how ledgers have changed civilizations and societies. They were started in Mesopotamia 7,000 years ago. You saw an absolute explosion in art, math, the sciences, and I think a lot of it had to do with that ledger itself being introduced for the first time, because you can track who and what. There was a second, iteration of this during the Renaissance with double entry bookkeeping. And then to me, this trustless, permissionless, peer-to-peer ledger could unlock a lot of amazing things. So I decided to go all in. And I joined CoinFund's. And today I'm one of the managing partners. I spent a lot of time looking at the intersection of those two worlds, trying to leverage my understanding of market structure and seeing how we can work with companies to solve problems through an investment lens. And then, of course, helping them build hopefully a lot of these companies will end up fixing a lot of the challenges we saw in traditional finance. And so I make plenty of introductions there. I also am spending a lot of time right now on the regulatory side of things. The one thing that I learned is that a word or a sentence of regulation can translate into billions of dollars of downstream value creation or value destruction. So you have to invest now with regulators to really make sure they get their policies right. I'm actually very encouraged by the progress that we're making. And so right now I'm in a premeditated manner, over-indexing on the regulatory front, because that's the time of the cycle that we're in. We got to get the laws and policies right.
Interesting. Thank you for sharing that. So I'm glad that you mentioned about the kind of innovation that blockchain technology brought to kind of any industry, because I think and that was actually a debate that I had last week with family office. And there is blockchain, right? The blockchain innovation and, this amazing technology that can cut intermediaries, really revolutionize many industries, not just finance. And then you have got crypto, which is speculation, which is, the playground where you have all these tokens that can go up and down. There is so much volatility. So when you are actually talking to investors, some investors, they understand the value of blockchain, but they don't like or understand understand, especially because it comes down to the capital being invested, the speculation that is in crypto. So I wanted to kind of like, obviously you are, a president of CoinFund, that is one of the leading crypto VC. I would like to kind of understand, how do you put together the utility aspect, and also obviously there is the element of volatility. So you have the blockchain technology and the utility, and then you have, the speculation and all these tokens. They come with the project. So I will be interested to understand, how you think about that.
Yeah, it's a great question, and we think it's very difficult to separate out the two and say, blockchain, not crypto, because fundamentally these types of products are very much intertwined. One of the things I'm working on with the CFTC right now is providing recommendations on utility tokens. But I think your question is around, how do you as an investor, or how do you explain the value add to investors? And really what you have to do is you have to apply a very, very disciplined, robust, detailed analysis of whatever asset you're interested in gaining exposure to. How do you do that? Well, you need to have very, very capable and competent technologists on your staff that can read the code, that can understand how it performs, how resilient it is against things like attacks. And then, of course, what utility does it deliver? To the extent that a token has a function, how good is it at delivering what it's designed to do, and how is it improving the current state of play? And so by applying that deep fundamental discipline, you try to arrive at truth and understand, what are these founders like? How big is the TAM? How big can this market be? And those are the things that we focus on as we consider partnering with various protocols. And so, is there speculation in crypto? Absolutely there is. In all markets there's speculation, frankly, and speculators play a very important role in price discovery. But I think you have to, the other thing that people sometimes talk about is this massive proliferation of tokens. So like this whole thing makes no sense. There's going to be millions of tokens. Of course there are. There's no cost to create tokens. And so you can't just they all serve different purposes. We have many meme coins. It's almost like saying, we should restrict the number of websites because, if we had too many websites, that's no good. The point is that what we're doing in crypto and Web3 is we're doing something very special. We have the ability now to put private property into the internet. We never had that before. Think about Web 2. What do you own? Maybe your domain name? Probably not. But now you can put private property into the internet. Property has all different types of values, right? Think of the physical world. Now we have a digital world. And it's not one size fit all. So you have to apply very, very deep research in order to understand the value associated with any property in the internet on the crypto side. On the blockchain side, again, what does it allow you to do? It allows you to move this private property in a trustless, permissionless way to another counterparty. The other thing that's great when you're looking at the value is that everything that's deployed in Web3 is instantaneously global. It's not like, a restaurant that maybe pops up in California, then moves to Chicago, and then over the decades spreads out, as it franchises out. No, we're instantaneously delivering something global, whether and anyone, whether you're in Europe, whether you're in Africa, Asia, you name it, you can automatically connect to it. So that helps increase the value opportunity, I think, for a lot of these projects because they're instantaneously globally accessible.
If we look at the NFT space, we are seeing some kind of struggles, and we know that, for example, the Bored Ape project, now most of their orders, they are down 90%, and NFTs that kind of struggle to find their role, basically. Although, there is a lot of potential because, we have got unique assets that we own in the real world, and that transfer into the digital world could be represented by an NFT. So what is your view about NFTs and how you think they are going to evolve, or if they are going to evolve beyond just being a collectibles, which is basically what they are?
It's a great question. I think a lot of that, I would never give any investment advice, but I think there's a lot of value in anything that's the very first generation of a new product. right? And so many of these, we just went through a pretty interesting cycle where NFTs were very hyped. A lot of speculation entered the market, and then they kind of came down materially. But many of these projects are cultural artifacts. They're the first of their kind. What's the value of NFTs going forward? Well, first off, NFTs are non-fungible tokens. They can mean a bunch of things. It doesn't have to be art. You can have a unique token for pretty much anything that you want to represent. If you're looking at it through a classical lens with what we call like 10K series, profile picture type series, I almost think of it as, in time, for the ones that have been successful, it's almost like you're part of a community, right? Most of NFTs, if they're a 10K series, there's about 10,000 of them that are launched. Again, it's immediately accessible to the earth. And for people that identify with that community and that project, they want to become a member, right? They want to have unique properties associated with other folks in that membership, whether it's pudgy penguins, punks, or whatever, because they're one of maybe, usually people don't just have one, they maybe have two or three. They want to be one of 5,000 holders. They want to be one of, and if you look at it through like a membership in a very exclusive club, right? People will pay thousands and thousands of dollars to be a member of a club, but they kind of got to live near the club because it's a pain if you have a membership and you can't really go there. Here you have a club that's instantaneously global. Only a few thousand people can probably join it. I think there will be some value in time for some of those community memberships. For example, we face a lot of challenges around what we call Sybil attacks, where people they try to get airdrops, so they spin up all these different wallets. Well, a lot of airdrops are awarded to NFT token holders of some of the more prestigious collections. And why is that? Because they know that they're unique. They're probably unique holders, and they have certain properties that probably make them pretty much into Web3 and properties that they want to cultivate. So I think it's a tool for community formation. I think we haven't seen the last of NFTs. I think they're down but not out. And I think there's some really interesting opportunities as you explore like these first generation cultural artifacts that, they had their ups and their downs, but it's very early. These assets have not been around very long.
It's very interesting that you mentioned about community, because it's true. It's kind of like a way to kind of strengthen community. At the same time, I'm kind of asking, I do have some NFTs as well, mainly because I like the community, but I'm thinking about the sustainability and the long-term value that community will build for me. And it might be great for this cycle. What is going to be about next one? So, you need to have amazing leaders. I think there is a lot about leadership and also ability to kind of like build also the people that will carry on growing the community. There are lots of questions that comes into that, but definitely, like you said, they are not definitely out, and we will see. Is there any particular project that you think is doing something just right in the space?
I think there are a couple that are if you look at the blue chip projects, they're all doing very different things. I probably wouldn't want to name one project over the other, but like some like Penguins, it's interesting, like where they have an entire physical capability now where they're selling toys, right? And they're helping to onboard new folks into crypto. I think that's really interesting. I don't want to, this is not investment advice or anything else. So yeah, I think it's a space to watch. I think it's down, it's not out. We saw a lot of the frenzy and speculation move from NFTs into meme coins. Now that seems to be settling down. So I don't know where the next wave of speculation is going to come, but hopefully, what we've seen over time is like out of the ashes, some pretty amazing world-changing initiatives emerge. And so I'm hoping to see that in the NFT space as well.
It's cool that you mentioned Puggy Penguin, because the things they are doing with the toy is all about IP, and that's definitely something that is a very interesting space. And there are also some really good projects on Bitcoin. They are kind of working on decentralized IP, like Pizza Ninja, for example. But definitely a space to watch. Now I want to move into some other areas that I know you have been quite vocal about. For example, DePin. So perhaps you can kind of tell us how do you think this sector is becoming more and more interesting, and maybe on rather than looking just a long-term view, what actually in the short medium-term view, which type of application we can see actually being rolled out?
Yeah, so DePin is an acronym for Decentralized Physical Infrastructure. It's I think people are debating, what exactly does that mean, and how physical does it have to be or not. But for me, we've seen that tokens, the incentivization of tokens, has had a very positive impact in the creation of big networks, right? So typically networks are oftentimes, previous to DePin, they were formed in a very centralized manner by a centralized internet company or whatever. And then even physical networks are like set up by companies. They set up different networks, whether it's cell phone networks or whatever else. DePin allows for the decentralization of networks, and people want to set them up because they want to earn the token. And so it's really interesting as you start thinking about it through a regulatory lens. If I'm doing this, generally a security in the States is done through the efforts of others. Well, gosh, in DePin, I'm doing it through myself. And so, we've announced investments in a couple of different companies that I think are really good examples. One is called Demo, and essentially your car has an incredible amount of information. That information is valuable. And what crypto allows you to do is to take control of your information and your data. And whereas in Web 2, they just take it, right? And so by taking charge of your data, you're able to give it to the network in an anonymized fashion, and then you get rewarded tokens for doing so. And you also get an app, and you get a nice user experience. I think they have over 100,000 cars connected to the network, and we're only just beginning to see the value. Another really interesting example would be something like a GeoNet. What GeoNet did is almost overnight, they created the largest, what's called an RTK network in the world. Think of it as like a next generation GPS. Today, GPS is accurate to about 3 meters, which is great, but it's not great if you're driving a car because you're going to crash if you're not accurate to 3 meters. But what this technology does is it allows users to have location accuracy to 1 centimeter. So it just will unlock all the, and it's technology that's been around since the 90s. It's just been very expensive because centralized companies set up these big towers and they charge a lot of money. And in fact, it powers what's known as precision agriculture. Precision agriculture increases farmer yields, but the problem is it's so expensive, only the biggest can use it. In the US, it's 27% of farmers. And so now by creating that decentralized, more accessible network, you're able to open up precision agriculture for others. But there's other applications. As you go from 3 meters to 1 centimeter, think about automated driving, think about drones, think about robots, think about construction, cars, or even gaming, like, Pokemon Go. Do you want to be accurate to 3 meters as you're messing with your AR/VR, or 1 centimeter? It unlocks a lot of potential. So these are a couple of examples. It's a really exciting vertical. We look at it all the time. There are projects around weather. There are projects around just different types of data that you can consolidate through these decentralized networks that are incentivized via the token.
So one aspect that I still haven't get my head around what is actually going to be the solution, and because you are doing so much work with regulation and trying to understand actually how legislations are going really to impact the crypto industry, I wanted to ask you about governance, because governance is a big problem, not just in crypto in general, in all humanity, right? And we thought that blockchain technology can actually solve the problem of governance, giving power to people. But actually, one token, one vote is not working. So how we can, first of all, how we can include subjective decision in something, in an infrastructure that is not binary. So how do you build this governance infrastructure? I know those are big questions, but perhaps you have seen maybe some project they are working on something interesting, and perhaps also would like to know if from a regulatory perspective there is interest in seeing something that can be a solution to that and perhaps give more trust for more adoption.
You're asking me all the easy questions, Steffi. Governance is hard. And I think one thing that we've seen is that in the traditional world, and even in governments, centralized is very easy when it comes to just quick decision making, right? And as you decentralize decision making, sometimes it's much more difficult to align on a path forward. And I think that's something that like DAOs have struggled with. At the same time, the world, and I think that people have been pivoting it against it recently, but there's all this talk about ESG. Everyone always focused on the E, but there was also a G in there around governance. And I published a blog on this a long time ago, and it's like, look, if you want to see a good answer for this G that you're trying to solve for, which is more accessible access to decisions and finances, etc. Web3, blockchain, like that gives through governance tokens, like it's a great way to solve for more access. I don't know if anyone has really nailed the ideal formula for this one, and I don't know if they can. I think governance is probably unique based on each and every individual product, there's probably optimal governance associated with gaining the outcomes that they want to seek. I mean, look at the difference in governance between like a Solana and an Ethereum, right? It's very, very different. And, is one right for one and the other? Is there a perfect way forward? I don't think so. I think over time, you'll see certain applications migrate to be very decentralized. Certain will maybe stay centralized. There are regulatory impacts to this, to your question. In the United States, we look at things like securities, and, this is, it's an investment in a common enterprise based on the efforts of others with an expectation of profit. So like, what is that common enterprise? How is it defined? These are all big questions when you look through a regulatory lens. I don't have a good answer other than to say that it's hard. Each project should really consider, particularly on the decentralized side, how to optimize for what they're trying to achieve.
Yeah, like you said, it might be very difficult to find one answer that fits.
Yeah.
Fits
perfect answer.
Right. Let's move to something even a little bit more, interesting and maybe challenging from your side. I would like to kind of pick your brain on all these different layer one. So in 2021, there was, the rise of multiple layer ones because the future is going to be multi-chain. And obviously Ethereum was having, good times, probably had one of the biggest network. And now, moving to 2024, we have seen Solana growing, being very resilient after the FTX collapse. And make me wonder what is really going to be the future of Ethereum. And then you see Polygon, they want to become this kind of like interconnected, focusing on being interconnected and kind of pull together all different layer one. And then you have Bitcoin, where there has been some amazing experimentation from, ordinals to, layer twos, DeFi. How do you see the future being with all these layer ones? Keeping aside the Bitcoin is digital gold, that, that's kind of like a simple narrative that everybody understands.
At this phase of the evolution of the new internet, there's been a lot of focus on layer ones, infrastructure, because that was simply the phase of the development. It's been a lot of focus on foundational technologies. I think in the future, there's going to be less focus on layer ones and a lot more focus on applications. If you think about it, layer ones, they quote compete, or they offer, maybe they will over-index on a couple of different things. But in a very basic level, they offer security, they offer transactions per second, throughput and speed and finality. And then there's a cost associated with them. So if you're going to execute a transaction or a different type of transaction, you may want to over-index for one of those things. Like if you're a high-frequency trader, you're going to want a ton of TPS and very low fees, right? Whereas something else may want to over-index on security or community or something else, right? My point is that in time, I think the foundation will be built to a place where no one's going to care what the layer one is. You're going to be on an application or a game or an exchange or something else, and you're just going to press the button, and what you want to do gets done. It gets done quickly for a very optimal price. And all that stuff behind you, you don't even think about because you're not a Web3 nerd. You're just a regular retail person entering into this internet that you use. And so there's going to be a lot less focus on the back end as the space matures. But what's end up going to happen is that all that infrastructure is going to be incredibly interoperable. It'll be optimizing in like very, very in real time effectively on all those things I'm talking about, security, TPS, and fees, to provide that user an optimal output for what they're trying to achieve. So it'll be, for us to be successful, I think it's going to have to, like, layer ones will have to fall into the background, serving a very, very important purpose. But, picking which blockchain I want to be on, that's like AOL dial-up internet, right? All of a sudden it's just going to be like, yeah, flip. I want to play this game. I want to buy that item in game. Boom, done. I don't even know it's on Avalanche. It just got done, right? That's how it's going to end up.
What about Bitcoin? What about everything that's been happening in the Bitcoin space?
Yeah, there's been a flurry of activity on the Bitcoin space. Layer twos, particularly out of Asia, there's been a massive amount of focus. Are they different? Are they special? They're working on providing a lot of that similar functionality on smart contracts, leveraging the security of the layer one. Ultimately, and I've even seen a bunch of projects that are working on interoperability. I would say that would feed into the same end game where, again, I don't care where the transaction gets done, it just gets done. And I will find the infrastructure behind me will find the most interesting place to settle. Look, I do think there's been pretty cool innovation on ruins and ordinals, inscriptions into into Bitcoin itself. I'm excited for more innovation on Bitcoin. Like, we need to solve for fees on the Bitcoin blockchain, and I think I encourage it. I'm excited about it. Does proof of works Bitcoin, does it end up being on its own island? I don't know, but it's valuable, and I'm excited about additional transaction fees that are being generated on that network. That's key to its long-term viability.
Do you invest in any Bitcoin project?
Yeah, we've operated in the space. Yes, we have. We would look at that space closely.
So let's move to stablecoin, which are also an interesting area, especially with regulation, especially in Europe, and then we have got obviously interest rates probably going down, and that is going to impact stable coins. So how are you seeing the space, especially when you look that we have got kind of like a monopoly of US stablecoin or dollar peg stable coins? What is going to be the opportunity outside that, if there are opportunities that they can have a bright future?
Yeah, I'm pretty obsessed with stable coins. I spend a lot of time thinking about them and also leveraging my old FX background. The opportunity set is just massive. First off, stable coins, I think there's like $170 billion that have been minted to date. To your point, 99% of that is US dollars. I don't think that's sustainable personally. I think that in time you'll see other countries' currencies coming to light. When you look at the utility of stable coins, I see three distinct verticals. The first is for payments, right? And I don't think the world wants to be paid in dollars. I think they like their local currency. The second is collateral, and collateral is needed to power the $700 trillion derivatives markets, and you need local currencies to settle in them. And it can also serve and it will enhance the FX trading experience. Today, FX trades $7.5 trillion per day. It settles T+2. And so now you have a technology that actually makes the system better, because you can settle instantly anytime with anyone in the world without what we call settlement risk. In traditional finance, that's known as Herstatt risk, which is a very famous bank in Germany that went insolvent because of settlement cycles. So effectively, you can make the world better. Frankly, as well, it's also a very important tool for national security, because like dollars and cash is very hard to trace. Whereas stable coins actually, there's this thing called freeze and seize if there's due process, where if stable coins get into a sanctioned government, the government can take actions to shut that down. People don't like to hear it, but it's a fact with centralized stable coins. So long story short, where are we and where are we going? We have great product market fit. It's a great product that works. It makes those three things better. Collateral, it eliminates risk. Payments, done much better. And then FX trading, again, it settles immediately, reduces risk, and enhances the experience. I don't think we're going to end up with 99% dollars. I think in traditional markets, it's around 58, 57%. So that's going to be a very interesting evolution. These are looked at MiCA very closely. It's in the States, we do think that stablecoin regulation is going to be probably coming out, hopefully by the end of this year. That will form a very strong baseline, because I do think that regulated stablecoins in the medium term will take off. Because would you rather be a holder of something that's regulated or unregulated if you want to have that value? I think most appetite will be for regulated. So as governments come online, that's going to be important. You spoke about interest rates, and that's a really good thing to talk about, because stablecoins can be incredibly profitable if the end user holds on to that interest, or it can be less profitable if rates come down or if that interest is paid out. So different rules have different things. Like in Europe, you can't pay out that interest. I think there is demand for some interest out of other places. To me, over time, as regulation takes hold, the companies that win will have to scale materially, because I think it'll be hard to make a lot of spread. I think in time, it'll stabilize and there'll be a lot of competition. So I think it's a very, very interesting. I think the non-dollar space is very interesting. And again, this is great product market fit. We get accused in crypto all the time, of just speculating on meme coins. Like, this is very real, and it's much better than what we have today. So I'm excited. And then, of course, after stablecoins, what are we seeing now? We're seeing money market funds, right? Which is the next iteration. In time, more and more things will come on chain because, again, it fixes settlement. It makes things easier operationally. And it also allows you to create liquidity for things sometimes that weren't as liquid. So, again, real utility. I would say that stablecoins are the first iteration of this bigger thing we call tokenization of real world assets. And again, I think it's a market that's poised to grow materially.
Yeah, and especially when we look at the emerging market, that's where, the stable coins can be really valuable. Crypto plus AI. Do you see any interesting application of that?
Yeah, my partner Jake, I think, is one of the foremost experts on this subject in the world. We published, we did our first investment in 21 with WorldCoin, which addresses a fundamental issue that we can talk about. We published a thesis in 22. We've been operating at the intersection for a very long time. I think the question that we all have to ask each other is, do we want AI to be a function? Do we want it to be open or do we want it to be closed? Do we want it to be controlled by, very centralized companies that have certain appetite to have the outputs look a certain way? Or do we want things more open and transparent? We think that there's definitely appetite and a stronger, longer-term view for the latter. What does this mean? That means data is going to be increasingly valuable, compute's going to be increasingly valuable. And so we look across the stack from decentralized data to decentralized compute to decentralized inference. And again, I think we're at the beginning of this journey. These two technologies, when you bring them together, are very powerful. Even when I go to Washington, D.C., they say crypto helps us authenticate AI. And I think you're going to see more and more of that. It's actually the politicians, I think light bulbs are starting to go on and say, well, wait a second, this crypto stuff, we may actually want it because we can use it to address some of the shortfalls that we're seeing in telling what's real and what's not as we use it to authenticate.
It's so interesting because then it brings also the issue about identity. And that's where there is all the problem with AI and identity and frauds. And, it becomes a really, I would say, dark space, very exciting, like you said, but full of challenges as well.
Yeah, so if you talk to somebody and you say, look, do you think that there's a problem right now where you can't tell the difference between a bot and a human? You say, yeah, there is, right? If only there was a way to tell who was a human and who was not. Okay, yeah, we need that. Well, science will tell you that the best way to figure out what's a human and what's a bot is through biometrics. Okay, and the best biometric is your eye retina scan. Yeah, that makes sense. Well, if only there was a way to use your retina scan in a privacy-preserving way to prove that you're a human in the internet, wouldn't that be awesome? And people are like, yeah, it sounds great. And well, that's kind of what WorldCoin is trying to do, right? Is they're trying to help people identify what's real and what's not. And so that's why we were early investors in them back in 21.
Yeah, I think that's definitely very early. Now, Chris, thank you so much for coming on the show. Before we go, I just want you to kind of give us a quick summary of, investment strategy at CoinFund and also how do you assess project, what you look in when, you are doing your due diligence and say, this, yes, could be an interesting candidate. We are going to look more into it.
Yeah, so we think it's a very, very interesting time for our space. When you look at what's happening right now, you have the global macro environment is starting to look much better than it did. Rates are coming down. That generally helps with commodity asset prices. And then, of course, you're also seeing material regulatory de-risking. And as governments start moving forward, it's happening in the U.S., it's happening in Europe, it's happening all over the world. As you start having clear regulatory rules of the road, what does that mean? It means that the asset class will be able to scale. And that scales is going to come through institutional adoption. It also, I think, is going to attract a new class of founders. Founders who are like, look, I really wanted to build this, but I didn't want to go to jail. And people are getting in trouble here and there and everywhere. I've got this awesome idea, but now that I know the rules and I can actually operate, I think it's going to attract a new class of talent. So these are very, very positive forces for our industry. And then, of course, as institutions start coming into the space again, you're going to see a lot more need for these products and services, as they're looking for partnerships or even acquisitions within the growth equity space as companies get mature. What do? We apply a very, very regimented and rigorous approach to any kind of investment that we'll undertake. We do incredibly deep research. It really starts with the founders. Founders are everything. They are the ones who make or break a project. The risk takers, they're probably the most valuable part of any economy is those entrepreneurs, those fearless entrepreneurs that are trying to change the world. And so it really starts with understanding who they are, what they're trying to achieve, and how big is that dream, and how big is that output, how big is that market that they're trying to build to. And so it really starts there. As companies become more advanced, we will analyze the business model, and what we like to do is help companies flourish and grow. Everyone at CoinFund has two jobs. They have their internal job, but if you look at our motto and our mission, it's to champion the leaders of the new internet. And what does that mean, champion? It means getting in the trenches with them, leveraging our deep experience, whether it's across people, whether it's across marketing, whether it's across regulatory navigation, to really help those founders, open doors for them, make their lives easier, give them the resources that they need, introduce them to other companies within the portfolio. These are the things that we do to really try to help them for success. One of the things I love about venture is that your interests are totally aligned, right? Once you have invested in a company and that founder, like, you are totally incented to make them successful. And I really, really love that alignment of interests, love opening doors, love making them, doing whatever we can to help them be successful. So that's our approach.
Fantastic. Chris, thank you so much for coming on the show and sharing your insight with us.
Grazie, Steffi. Have a wonderful day.